I was just going to say, I mean, I think I wanted to transition it to 2025, and
I was going to go there too. Yeah, I was going to go there.
very good. So I think, and you guys can read more about this when the article comes out, but no matter how you describe it, 2024 perspective, you could kind of say it's overvalued, right? But let's just give some grace and say, okay, 2025 is going to be different. So let's just say we do actually get to 4 billion, right? Which is a 40% year over year growth from about what we're expecting to see, whether it's 27, 30% in the fourth quarter. Give us some grace. Fiscal year 2025, we get to 4 billion, right? Which is way more than the 26% that analysts are providing, but let's just give us some grace and say that. Even still, price to sales will be between 47 and 55 times if you're between 3.5 and 4 billion in terms of revenue. And that's still way north of a typical 9 to 11 times that are expected in kind of software sales that you're seeing in the majority of the S&P 500. So there's that number, 45 to 50x in terms of price to sales, still very richly valued. And then also on top of that 4 billion, let's assume we get net income margins of 5%. That's 5%, sorry, 25%. That's 5% more than we're kind of seeing right now at 20% currently. And that's likely to be very high on the upper edge of Palantir's guidance, if at all. But let's just say you do get to that. Your price to earnings is still going to be just below 200x compared to where it is today, which is still pretty aggressive, which is an improvement on fiscal year 2024, but way overvalued, if you ask me, compared to current growth. And in this generous forecast, I just want to give some other ideas for other ways to evaluate this. Even on a price to ops cash, which generally is much higher than the net income due to the drag of share-based compensation, you're still looking at 135x price to ops cash, and that's assuming a 35% ops cash margin. So, I mean, what I'm getting after is, even if you're looking at 2025, and even if you were to add numbers onto 2026, how many years are you willing to pay for what you're seeing today, right? And what if sentiment on the stock changes back to where it was back in 2022? We've seen this, and already I think, and Amir mentioned this, back in 2022, 2023, the sentiment on the stock was dog shit, to use a horrible word, but it's the truth. And so, now that we're in this hopium stage, which is what I'm kind of calling it, is retail really willing to hold 80s on the price tag if these numbers kind of come to fruition, and yet the growth doesn't grow into the 40s, 50s, 60% year over year kind of.
Yeah, I think one thing that's really important about this is that what you said, Matt, is that even if we have an incredible quarter, like 40% growth, which I don't know if we're going to guide for that, but let's say we guide for that, still the stock is expensive, right? It's almost 5 times the normal price of sales for a software company. So I guess that begs the question then, do any of us think this stock is ever going to trade back down to what people would consider reality? Because let's say we don't get a 40% guide, which I'm skeptical, because if they were going to do 40%, I think they would guide for like 32% and then just slowly raise it. They wouldn't give it all at once. I mean, at this point, Palantir's defied reality for the better part of the last year. Do we think it has to come back down to reality, Arnie?
What's the reality?
Well, reality would be, I don't know, 20 times price to sales instead of 72, right? But like so I guess the question is the qualitative, when you hear OpenAI getting a $350 billion valuation, is that so much in the news that it would make investors overlook the 72 times price of sales that maybe becomes 50 times, as Matt was saying, with 40% growth, and still say Palantir is the answer?
I'll tell you paradoxically that I think 20 times sales right now would not be reality. That would be insanely cheap. That's my personal expectation at that time, because if you think of 20 times sales, which is already the double of the average software company, if you look at it from a free cash flow perspective, you would get a company that has 30% growth, 40% free cash flow margin at 60 times free cash flow. Actually more, 60, but less than 60 times free cash flow multiple.
Yeah, right now it's at 140 times free cash flow.
Mm-hmm. Well, that's right now is very high, okay? But it's very high also based on relatively weak expectations. That's why I keep insisting that when we look at the multiples based on the future, we need to check, okay, the multiple is high or low, but we also need to see how high or low the estimates with which that multiple is computed. And we noticed just a couple of minutes ago that the analyst expectations for that future are not that high. And that is essentially why the bulls have won us up to now, because even when people were saying, oh, but okay, now let's say that SBC is not a problem, the stock is still untouchable from a valuation perspective, but the numbers came out much better than the expectations, which essentially made the real numbers shrunk every time. Now, you mentioned OpenAI, that literally poses the question, but is Palantir less valuable than OpenAI? Frankly, I'm surprised that just a week after seeing the potential thesis of OpenAI shaking a little bit with DeepSeek, which is essentially a Chinese chip clone, you get OpenAI having talks about more than doubling their reputation. I remember the last time was 150, so more than doubling, while they're still burning a lot of cash. There are essentially no expectations, while also the entire thesis around the company is starting to shaking, because if your product is more and more commoditized, you have less pricing power for the revenue, which also means getting to profitability is way harder. On the other side, you have a company that is already like perfectly sit. In 5 years from now, we argued that the value is more converging into the application layer, while the competition is fierce into the AI model layer. So that makes me question, okay, the valuation of Palantir is very high based on multiples that reflect relatively pessimistic expectations versus my own expectations. And on the other side, we see the market that is willing to pay $350 billion for something that is set to be commoditized. If I look at it in that perspective, I would say, yes, if I stay in the spreadsheet, it makes no sense. If I look at it in an overall context, I could see a sense for which, okay, now all the money starts converging again into Palantir, because that is where people realize the strong value is. I don't see absurdity into thinking that we could keep going higher and higher, because look, that's a little like a random boom. Costco is trading how much? At 50, 60 times earnings, but for a company that is growing well, very well compared with the peers. But overall, that is not a company that can scale almost infinitely like Palantir. And Palantir can literally take all this $1 trillion TAM that Karp was mentioning time ago. So yes, there's a comment that Costco is reliable, and will say Palantir even makes more money if there is a world war. Whatever problem there is in the world, potentially you can solve it with software. And now Palantir is perceived to be that kind of software that can solve literally almost every problem.
Yeah, essentially making the argument that in this market, if we're trading at 60 times earnings on Costco, which there's not the biggest thesis. To be honest. Yeah, the fact that investors are willing to pay 60 times on Costco for relatively small growth compared to something like a Tesla or Palantir or whatever, maybe not Tesla, but an Nvidia or whatever, then that means that the market would be willing to pay a premium on a company that has all the brand recognition like Palantir does, even if the growth is not astronomical like Nvidia. Amir, what is your perspective on Palantir price coming back down to reality, and what do you think reality looks like for Palantir?
Yeah, just quickly, I think pricing metrics are a very flat way to look at things that don't really capture the drivers of intrinsic value, which are growth, cash flows, and risk. I mean, it's just a reflection of current or near-term expectations based on analysts, and in Palantir's case, they've been very wrong historically. I think looking at pricing metrics and relating those is a lot more of a more proper approach for more mature businesses. I mean, for Palantir, that has most of its value and growth like into the future, even in the terminal periods. I mean, Palantir is the type of business that benefits greatly, as Arnie mentioned, from network effects. The core mission is literally to be the operating system of the modern enterprise. Basically, every single industry that exists, both in the commercial and government space. So it could be anything: military, healthcare, aviation, logistics, energy. I mean, literally, there's nothing that Palantir can't do. So trying to base like, well, based on current revenues, it deserves this kind of multiple. That's not the way I approach it. I like to approach it from actually a valuation perspective, where we look and try to estimate future performance and bring it back. And yeah, to answer the question, yes, I do believe it is both overvalued and overpriced here. If it gets back to reality, I mean, it always does sooner or later. For Palantir, the current narrative that I can tell brings us something like, let me just check, like $53 roughly as of right now. Of course, that's keep changing as we learn more about the business. But yeah, I believe it is very possible that it will come down to somewhere in the 60s, 50s, perhaps even 40s, depending on the external factors. Like we know that the 47th president is doing a lot of stuff. It could weigh down on the market, like external factors. But that doesn't mean the business is weak and can't grow at 40% that we've been talking about. It's just like the current valuation for the narrative that I can tell. So can it? Of course. It's always easier after the fact. People will tell you, oh, I knew it was a bubble, that it will pop. And then as it keeps trading up, people will be like, yeah, you just don't get it. So you always get two sides of the coins. You get the overly optimistic and overly bearish, depending on where the stock quote is. And reality is usually somewhere between. And for me, that's somewhere around $55 to $60 range. And do I believe it can get there? Yeah, sure.